All right, welcome back. We are in Chapter 13 looking at payroll. And after looking at the work together, I was less than fired up with the way it looks. So we're going to move on to application problem 13.1. We have Dana's payroll register for the July 1 to 15 and July 16 to 31 payroll. They don't give us all of the individual information, Bobby, Susie, Joey, all of their payroll information. They just give us the final totals, which is really all we need for the journal entry. So we're going to start out like we would with every other cash payment transaction, our date. And we got July 15th of 2019. The largest number given is always going to be the salary expense. The salary expense in our case is going to be a debit because, again, expenses are debits. And this is our total earnings. Gross earnings all means the same thing. In this example, the number is $6,970. Our second biggest number, our net pay, is going to be our cash credits. In this example, it's $5,571.79. Right now, our debits do not equal our credits. So to make that happen, we have to do a bunch more credits, right? We got a almost $7,000 debit and almost a $5,500 credit. Well, what's the difference? All the taxes that have been taken out of the employee's paychecks. So we start out with our first one, which is employee income tax payable. Make sure that you're in the credit column for this because these are liabilities that we're holding on to that we will eventually send to the government. $685 as a credit. We then have Social Security tax payable. And that's going to be $432 and 14 cents. We got Medicare tax payable, and that's $101.07. They're going with U.S. savings bonds as the B. And if it said UW, that'd be United Way donations. And that's $180. Normally, most businesses you'd probably see like a 401k, 403b, a Roth IRA, Flex Medical, Flex Daycare, stuff like that. This is a little bit older textbook, so they're just going with U.S. savings bonds payable. As we take a look, when we're done, our debits and credits need to equal. So we have all of our taxes as credits and our cash credit equal to our general debit, which is our salary expense. We look at a little cleaner version of that. Here's our July 15th payroll, salary expense, employee income tax payable, social, Medicare, U.S. savings bond. You could have health insurance premiums payable, United Way donations payable, blah, 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 payable. Okay. Check number, the instructions told us the check number was 547. We then move on to the July 31st payroll. In the textbook, it'll often read paid cash for semi-monthly payroll, right? When you see those words, semi-monthly payroll, that is 13.1 employee payroll. That is us needing to come up with money to make our employees work for us. So our July 31st amount, salary expense of $6,040, net pay or wrote the check of $4,800 with our 4 sets of taxes, employee income tax, social, Medicare, and U.S. savings bonds payable. So this is 13.1 employee payroll.